Question 1. Policy riders and endorsements. Which of the following statements about the waiver of premium rider in disability insurance policies is correct? A. The waiver of premium rider allows policyholders to stop paying premiums only if they meet the presumptive disability criteria, such as losing both hands or eyesight. B. The waiver of premium rider immediately applies after the first day of disability, regardless of the waiting or elimination period. C. The waiver of premium rider suspends premium payments during disability and refunds any premiums paid during the elimination period once the rider is activated. D. The waiver of premium rider applies automatically to all policies and cannot be declined by the policyholder. Answer. C. Explanation. Option A. Incorrect. While presumptive disability automatically qualifies for a waiver, the rider is not limited to such severe cases. Other types of qualifying disabilities may also activate the waiver. Option B. Incorrect. Waiver of premium typically requires the policyholder to satisfy an elimination period before it activates. Option C. Correct. The waiver suspends premium payments during disability and retroactively refunds premiums paid during the elimination period. This aligns with common contract provisions under Arizona disability insurance policies. Option D. Incorrect. The waiver of premium is an optional rider, and policyholders can choose whether to include it. Relevant rule. Arizona insurance regulations ensure transparency about rider terms and require clear definitions of activation conditions in the policy. Question 2. Scenario-based question. Claims and benefit administration. Scenario. Lisa owns an individual disability insurance policy with a 90-day elimination period and a benefit period of 5 years. She files a claim for disability after a severe injury at work that prevents her from performing her current occupation. The insurer begins processing her claim but denies benefits on the grounds that Lisa did not provide sufficient medical evidence. Lisa believes she has met all the policy requirements and wants to challenge the denial. What is the most appropriate next step for Lisa under Arizona insurance law? A. Lisa should immediately file a lawsuit against the insurer in an Arizona civil court. B. Lisa should submit additional medical documentation and request a formal internal review or appeal from the insurer. C. Lisa should cancel her policy and seek coverage through another insurer to avoid further issues. D. Lisa should file a complaint directly with the Arizona Department of Insurance and Financial Institutions, DIFI, before engaging with the insurer again. Answer. B. Explanation. Option A. Incorrect. Litigation should be a last resort after exhausting internal dispute resolution processes. Option B. Correct. Arizona insurance laws require insurers to offer internal review processes for denied claims. Lisa should submit additional documentation and follow the appeal process before escalating further. Option C. Incorrect. Canceling the policy would not address the denial issue and could leave Lisa without coverage for future claims. Option D. Incorrect. While Lisa can file a complaint with DIFI, it is typically recommended to complete the insurer's appeal process first to demonstrate a good faith effort to resolve the dispute. Relevant rule. Arizona revised statutes Ars Title 20 require insurers to provide a fair and transparent claims process, including an appeal mechanism for denials. Question 3. Ethics and professional responsibility. A licensed insurance producer in Arizona is approached by a client who has an existing disability insurance policy. The producer recommends replacing the current policy with a new one, but does not disclose the potential loss of certain benefits under the old policy. Which of the following best describes the producer's action? A. The producer acted ethically by offering a newer policy with more modern features. B. The producer violated Arizona's disclosure requirements by failing to explain the consequences of replacement. C. The producer's actions are acceptable as long as the client willingly agrees to the replacement. D. The producer is not obligated to inform the client of any differences in coverage, since the policyholder should compare policies independently. Answer. B. Explanation. Option A. Incorrect. Ethical practices require full transparency, regardless of potential benefits from a new policy. Option B. Correct. Arizona law mandates that producers disclose all relevant information when replacing an insurance policy, including any loss of benefits. Failure to do so constitutes a violation of ethical and legal responsibilities. Option C. Incorrect. Client agreement alone does not absolve the producer of their duty to disclose key information about policy replacement. Option D. Incorrect. The producer has a fiduciary responsibility to ensure the client is informed about the implications of replacing a policy. Relevant rule: Arizona-specific replacement regulations require thorough comparison of policies and disclosure of benefits and limitations to protect consumers from potential loss of coverage or benefits. Question 4. Regulatory environment. Which of the following best describes the licensing requirements for a non-resident producer seeking to sell disability insurance in Arizona? A. Non-resident producers must pass Arizona's state-specific licensing exam and submit proof of residency. B. Non-resident producers are automatically granted an Arizona license if they hold a valid license in their home state. C. Non-resident producers must apply for a license, pay applicable fees, and maintain a valid license in good standing in their home state. D. Non-resident producers are not required to obtain a separate license to sell disability insurance in Arizona. Answer C. Explanation. Option A, incorrect. Arizona does not require non-residents to take the state-specific exam provided they are licensed in good standing in their home state. Option B, incorrect. Automatic licensure is not granted and non-residents must still apply and meet Arizona's requirements. Option C, correct. Arizona permits non-resident producers to apply for licensure as long as they fulfill the state's application requirements, pay fees, and maintain licensure in their home state. Option D, incorrect. Selling insurance in Arizona without the appropriate license is prohibited under state law. Relevant rule: ARS Title 20 and the Arizona Department of Insurance and Financial Institutions outline non-resident licensing requirements and application procedures. Question 5. Types of disability insurance policies. Which of the following is a distinguishing feature of a non-cancelable individual disability income policy? A. The policy cannot be cancelled by the insurer, but premiums may be increased if the insured's risk profile changes. B. The policy cannot be cancelled by the insurer and premiums are guaranteed not to increase as long as the insured pays them on time. C. The policy can be cancelled by the insurer after the initial term if claims exceed a certain threshold. D. The policy premiums are guaranteed for a fixed term but can be adjusted after renewal. Answer B. Explanation. Option A, incorrect. Non-cancelable policies guarantee both coverage and premiums regardless of changes in the insured's risk profile. Option B, correct. Non-cancelable policies ensure the policy cannot be cancelled and premiums remain fixed throughout the life of the policy as long as the insured pays premiums on time. Option C, incorrect. Claims history does not affect the continuation of non-cancelable policies. Option D, incorrect. Premium adjustments are not allowed under non-cancelable policies. Relevant rule: under Arizona insurance regulations, non-cancelable policies provide the highest level of stability for policyholders by locking in both coverage and premiums. Question 6. Scenario-based question. Claims and benefit administration scenario. Michael owns a long-term disability policy with a residual disability rider. After a car accident, he is able to return to work part-time but cannot perform all his job duties, resulting in a 40% reduction in income. Michael files a claim under his policy. What benefits will Michael likely receive under the residual disability rider? A. Michael will receive full disability benefits since he experienced a loss of income. B. Michael will receive a proportional benefit based on the percentage of income he has lost. C. Michael will not receive any benefits since he has returned to work. D. Michael will receive benefits only if his income loss exceeds 50%. Answer B. Explanation. Option A, incorrect. Residual disability benefits are proportional to the insured's loss of income, not full benefits. Option B, correct. Residual disability riders typically pay a percentage of the full benefit corresponding to the insured's percentage loss of income, in this case, 40%. Option C, incorrect. Returning to work does not disqualify the insured from residual benefits if income is reduced. Option D, incorrect. While some policies may set a threshold for residual benefits, it is usually lower than 50%. Relevant rule: Arizona disability insurance policies with residual disability riders follow standard practices for proportional benefit calculation as detailed in the policy contract. Question 7. Policy provisions and clauses. Which clause in a disability insurance policy ensures the insured has a period to reinstate a lapsed policy by paying back premiums and proving insurability? A. Grace period clause. B. Reinstatement clause. C. Entire contract clause. D. Incontestability clause. Answer B. Explanation. Option A, incorrect. The grace period clause allows for late premium payments without policy lapse but does not apply after lapse occurs. Option B, correct. The reinstatement clause allows the insured to reinstate a lapsed policy by fulfilling specific requirements such as paying back premiums and providing evidence of insurability. Option C, incorrect. The entire contract clause ensures all policy documents are part of the contract but does not address reinstatement. Option D, incorrect. The incontestability clause limits the insurer's ability to dispute claims after a certain period but does not relate to reinstatement. Relevant rule: Arizona revised statutes align with NAIC model laws on reinstatement provisions, requiring insurers to include clear guidelines in their policies. Question 8. Ethics and professional responsibility. An Arizona insurance producer is marketing a disability insurance policy and exaggerates the potential benefits to convince a client to purchase. This practice is considered A. legal if the client signs the application and agrees to the terms. B. a violation of Arizona's unfair trade practices laws and ethical guidelines. C. acceptable if the policy delivers at least some of the benefits discussed. D. a standard marketing practice provided the producer discloses policy exclusions. Answer: B. Explanation. Option A, incorrect. Exaggerating benefits misrepresents the policy and violates ethical and legal standards. Option B, correct. Arizona law prohibits misrepresentation and deceptive practices under its unfair trade practices statutes. Option C, incorrect. Partial delivery of benefits does not excuse misrepresentation. Option D, incorrect. Ethical marketing requires producers to provide accurate and honest information, not partial or exaggerated claims. Relevant rule: Arizona revised statutes Title 20 prohibit false advertising and misrepresentation in insurance marketing. Question 9. Policy underwriting and rating. Which of the following factors is not typically considered during the underwriting process for a disability insurance policy? A. The applicant's occupation. B. The applicant's marital status. C. The applicant's medical history. D. The applicant's income level. Answer: B. Explanation. Option A, incorrect. Occupation is critical as it determines the risk of disability. Option B, correct. Marital status is irrelevant to disability insurance underwriting. Option C, incorrect. Medical history is a key component in assessing risk. Option D, incorrect. Income level is necessary to determine appropriate benefit amounts. Relevant rule: Arizona disability insurance underwriting must comply with state guidelines, which focus on risk-relevant factors. Question 10. Types of disability insurance policies. What is a primary advantage of employer-sponsored group disability insurance? A. The policy is always portable, allowing employees to keep the coverage if they leave the employer. B. The premiums are typically lower than individual policies due to group risk pooling. C. Benefits are always tax-free, regardless of how premiums are paid. D. Group policies typically have fewer exclusions than individual policies. Answer: B. Explanation. Option A, incorrect. Many group policies are not portable unless a conversion option is offered. Option B, correct. Group policies leverage risk pooling, resulting in lower premiums compared to individual coverage. Option C, incorrect. Benefits are taxable if the employer pays the premiums. Option D, incorrect. Group policies may have similar or more exclusions than individual policies. Relevant rule: Arizona insurance regulations allow employers to offer group policies with cost advantages due to shared risk among employees. Question 11. Policy exclusions. Which of the following scenarios would most likely be excluded under a disability insurance policy? A. The insured is injured in an accident while commuting to work. B. The insured becomes disabled due to a pre-existing condition disclosed during underwriting. C. The insured becomes disabled as a result of a self-inflicted injury. D. The insured becomes disabled after being diagnosed with a covered illness. Answer: C. Explanation. Option A, incorrect. Accidents are typically covered. Option B, incorrect. Pre-existing conditions are covered if disclosed and not specifically excluded. Option C, correct. Disabilities caused by self-inflicted injuries are generally excluded from coverage. Option D, incorrect. Disabilities caused by covered illnesses are included. Relevant rule: most disability insurance policies explicitly exclude self-inflicted injuries to prevent abuse. Question 12. Elimination periods. What is the primary purpose of the elimination period in a disability insurance policy? A. To provide a period during which the insurer can deny coverage for pre-existing conditions. B. To act as a deductible by requiring the insured to wait before receiving benefits. C. To allow the insurer time to investigate the claim. D. To ensure benefits begin immediately after a disability is diagnosed. Answer B. Explanation. Option A. Incorrect. Elimination periods are unrelated to pre-existing condition exclusions. Option B. Correct. The elimination period serves as a waiting period before benefits are payable, effectively acting as a time-based deductible. Option C. Incorrect. While claims investigations occur during this time, it is not the primary purpose. Option D. Incorrect. Benefits do not start immediately due to the elimination period. Relevant rule: elimination periods are a standard feature of disability insurance policies and help manage premium costs. Question 13. Own occupation policies. Under an own occupation disability insurance policy, when is the insured eligible to receive benefits? A. When they are unable to perform the duties of their specific occupation, regardless of their ability to work in another job. B. When they are unable to work in any occupation for which they are reasonably qualified. C. When they are unable to work at all, even in part-time positions. D. Only if they are permanently and totally disabled. Answer A. Explanation. Option A. Correct. Own occupation policies pay benefits if the insurer cannot perform their specific job duties, even if they can work in another capacity. Option B. Incorrect. This describes any occupation policies. Option C. Incorrect. Partial or temporary disability can still qualify under own occupation policies. Option D. Incorrect. Own occupation policies do not require permanent total disability. Relevant rule: own occupation policies are tailored to high-income professionals who specialize in specific fields. Question 14. Partial disability riders. What is the primary benefit of a partial disability rider in a disability insurance policy? A. It ensures the insured receives full benefits even if they return to work. B. It allows the insured to receive benefits proportionate to their loss of income while partially disabled. C. It waives premiums during the benefit period. D. It extends coverage beyond the policy's expiration date. Answer B. Explanation. Option A. Incorrect. Full benefits are not typically provided under partial disability riders. Option B. Correct. Partial disability riders compensate the insured for lost income while they are partially disabled and working in a reduced capacity. Option C. Incorrect. Premium waivers are covered under a separate rider. Option D. Incorrect. Partial disability riders do not alter policy expiration dates. Relevant rule: partial disability benefits are designed to support insureds who can work part-time or in a limited role. Question 15. Scenario-based question. Premium waiver scenario. Susan has a disability insurance policy with a waiver of premium rider. She suffers a temporary disability and receives benefits for 6 months before recovering fully and returning to work. What happens to her premium payments during and after her disability? A. She must continue paying premiums during her disability but receives a refund later. B. Her premiums are waived during her disability and resume when she returns to work. C. Her premiums are permanently waived even after recovery. D. She is required to pay back the waived premiums after recovery. Answer B. Explanation. Option A. Incorrect. Waiver of premium eliminates the need to pay premiums during disability, not defer them. Option B. Correct. The waiver of premium rider suspends payments during the disability period, but they resume after recovery. Option C. Incorrect. Waived premiums apply only during the disability period. Option D. Incorrect. Insureds are not required to repay waived premiums. Question 16. Group disability insurance taxation. If an employer pays the premiums for a group disability insurance policy, how are the benefits taxed when the insured receives them? A. Benefits are received tax-free by the insured. B. Benefits are taxable to the insured as income. C. Benefits are tax-deductible to the insured. D. Benefits are partially taxable depending on the premium split. Answer B. Explanation. When employers pay the premiums, the IRS considers the benefits taxable income to the insured. If the insured pays the premiums with after-tax dollars, benefits are tax-free. Question 17. Cost of living adjustment COLA riders. What is the primary purpose of a COLA rider in a disability insurance policy? A. To increase benefits based on the insured's performance reviews at work. B. To adjust benefits annually to account for inflation. C. To reduce premiums over time as the policyholder ages. D. To guarantee benefit payments regardless of claim investigations. Answer B. Explanation. COLA riders protect the insured's purchasing power by increasing benefits annually to match inflation rates. Question 18. Arizona-specific regulations. In Arizona, how long does the free look period last for individual disability insurance policies? A. 10 days, B. 15 days, C. 30 days, D. 60 days. Answer: C. Explanation. Arizona requires insurers to provide a 30-day free look period, allowing policyholders to review and cancel their policies for a full refund. Question 19. Policy termination provisions. Which of the following would typically result in the termination of a disability insurance policy? A. The insured changes occupations. B. The insured moves to another state. C. The insured stops paying premiums. D. The insured takes a leave of absence from work. Answer: C. Explanation. Failure to pay premiums is a primary cause of policy termination. Changes in occupation or residence do not usually result in termination unless stipulated otherwise. Question 20. Residual versus partial disability. What is the key difference between residual disability benefits and partial disability benefits? A. Residual benefits are paid if the insured is unable to work at all, while partial benefits are not. B. Partial benefits are fixed amounts, while residual benefits are proportional to income loss. C. Residual benefits apply to long-term disabilities only, while partial benefits apply to short-term disabilities. D. There is no difference. They are interchangeable terms. Answer: B. Explanation. Residual disability benefits are proportional to the insured's income loss, while partial disability benefits may be fixed or proportional depending on the policy. Question 21. Definition of total disability. Under a disability insurance policy, which definition of total disability is the most restrictive? A. Unable to perform the duties of your own occupation. B. Unable to perform the duties of any occupation for which you are reasonably qualified. C. Unable to perform any work-related duties at all. D. Unable to work for a specific employer or in a specific field. Answer: C. Explanation. Option A. Incorrect. This is the least restrictive own occupation definition. Option B. Incorrect. This is more restrictive than own occupation but less restrictive than total inability. Option C. Correct. Any work-related duties is the most restrictive. Option D. Incorrect. Policies are not limited to specific employers or fields. Question 22. Rehabilitation benefits. What is the purpose of the rehabilitation benefit included in some disability insurance policies? A. To reimburse medical expenses related to the disability. B. To provide funds for job training or skill development to help the insured return to work. C. To increase the monthly benefit amount during the recovery period. D. To extend the elimination period for financial stability. Answer: B. Explanation. Rehabilitation benefits support insureds in returning to work by funding training, education, or equipment necessary for re-entering the workforce. Question 23. Guaranteed renewable policies. What does it mean if a disability insurance policy is guaranteed renewable? A. The insurer can cancel the policy at any time. B. The insured can renew the policy without proof of insurability, but premiums may increase. C. The policy automatically renews at the same premium rate regardless of claims. D. The insured must renew the policy annually with a renewal fee. Answer: B. Explanation. Guaranteed renewable policies ensure coverage cannot be cancelled as long as premiums are paid, but premiums can be adjusted for an entire class of policyholders. Question 24. Scenario-based question. Coordination of benefits. Scenario: John has two disability insurance policies, one individual and one group policy. He becomes disabled and files claims with both insurers. How are his benefits likely to be coordinated? A. Both policies pay full benefits regardless of the total amount. B. Benefits are reduced to ensure they do not exceed a percentage of his pre-disability income. C. The group policy pays first and the individual policy pays any remaining amount. D. Benefits are determined by the policy with the higher elimination period. Answer: B. Explanation. Disability insurance benefits are often coordinated to avoid exceeding a percentage of pre-disability income, preventing overcompensation. Question 25. Taxation of benefits in split premium scenarios. If an individual and their employer split the cost of a disability insurance premium, how are the benefits taxed? A. Fully taxable to the insured. B. partially taxable based on the percentage of premiums paid by the employer. C. Fully tax-free if the insured paid any portion of the premiums. D. Benefits are never taxable in this scenario. Answer B. Explanation. When premiums are shared, the portion of the benefits corresponding to the employer-paid premiums is taxable. Question 26. Presumptive disability. What is typically required to qualify for presumptive disability benefits? A. A total and permanent inability to work in any occupation. B. A loss of income exceeding 75% of pre-disability earnings. C. A specific catastrophic condition such as loss of sight, hearing, or limbs. D. A medical diagnosis of any chronic condition. Answer C. Explanation. Presumptive disability benefits are triggered by severe conditions like blindness, deafness, or loss of limbs, bypassing standard definitions of disability. Question 27. Supplemental disability insurance. Why might a high-earning professional purchase supplemental disability insurance? A. To cover short-term disabilities that standard policies exclude. B. To provide coverage beyond what their group disability insurance offers. C. To avoid elimination periods entirely. D. To reduce their overall insurance costs. Answer B. Explanation. Group policies often have benefit caps insufficient for high earners, making supplemental insurance necessary to bridge the income gap. Question 28. Key person disability insurance. What is the primary purpose of key person disability insurance? A. To replace the income of a key employee during disability. B. To cover business expenses during the key person's absence. C. To compensate the business for lost revenue due to the disability of a key employee. D. To provide personal disability benefits to the insured. Answer C. Explanation. Key person disability insurance protects businesses by compensating for revenue losses when a critical employee becomes disabled. Question 29. Residual disability scenario. Emily owns a policy with residual disability benefits. After recovering from a disability, she returns to work part-time, earning 60% of her pre-disability income. How will her residual benefits likely be calculated? A. Based on her total pre-disability income. B. Proportionate to her income loss, 40% of her pre-disability benefit amount. C. A fixed amount specified in her policy. D. Full benefits for the first year, then reduced. Answer B. Explanation. Residual benefits compensate for the percentage of income lost due to partial recovery and reduced capacity to work. Question 30. Group policy limitations. Which of the following is a common limitation of group disability insurance policies? A. They offer higher monthly benefits compared to individual policies. B. Coverage is portable and continues after leaving the employer. C. They may have stricter definitions of disability and low benefit caps. D. Premiums are higher compared to individual policies. Answer C. Explanation. Group policies often have low benefit caps, stricter definitions, and are not portable, making them less comprehensive than individual policies.